What's your initial reaction to what Tesla seems to have delivered here?
I think you're seeing the consumer is still strong. I think you saw in Microsoft the enterprise is a little bit weaker. People are giving tough guidance on the enterprise, but the consumer is continuing to do what the consumer does, and you're probably going to see it throughout travel and in some discretionary spend.
Do you feel to this point, now we have a lot of big tech earnings to come,
yes.
All right? Let's not make any jump to huge conclusions at this point, but can we say better than feared for the space, or is it too early?
It's too early, but you're starting to see some of the breadcrumbs. You're starting to see some of the travel guys, including the airlines, positively predisposed, people confirming guidance. You've seen some on the travel side. And obviously Tesla confirming guidance at a 50% CAGR shows that not only do they feel good about this year, but they feel good about through the recession.
What about this move early year in tech? Is it believable? Is it a head fake? How would you view it?
I still think we don't know yet. And I think a lot of people are waiting to see what does guidance mean? How are the big companies going to guide? And for now, it's a head fake. What the guidance we're giving from the board level is, hey, let's expect that things don't get any better. Let's assume there might be a bottom we're going to bounce around for most of the year, and let's assume that we're going to plan for the best, but plan for the worst, but hope for the best.
I mean, any better, not getting any better may be a victory in this kind of market, as long as things don't get materially worse. I mean, you look at what Microsoft had to say, and they make you believe that things could get materially worse. You listen to other companies, even in the tech space, and suggest, I don't know, maybe it's not as bad as Satya Nadella would lead you to believe things are.
I think it's going to be a mixed bag, and what we've talked about over the last year plus, and since the market started to crack, it's not going to be a broad-based all software is good or all enterprise is bad. That individual companies will either beat or hit earnings in a much more jagged way than they had in the last couple of years.
Enterprise, though, seems like a particularly tough area to be in right now, more so than many other areas of tech.
I would completely agree. I think you're seeing with the layoffs, so there's less seats, there's going to be less software, and the CFOs that we're seeing are really scrubbing their P&Ls. And if you're cutting that level of heads, it means that you're going to go after all expenses pretty aggressively.
We view Tesla in so many different prisms. It's, in many respects, a poster stock right now for what were these much higher multiple tech names, the ARC-type stocks that got absolutely destroyed last year, but now have rallied back. And you sort of take those in a basket, and then you put the mega caps in a basket. Do you think valuations have finished resetting in the ARC-type names, the higher beta tech stocks that got smoked last year?
I don't think so, because I think some of those broad-based names are not as good as those valuations suggest. And I think some of the highly speculative stocks that are part of that ARC portfolio are not going to do as well. And even Tesla, which I'm not sure is still being valued as a tech company compared to a car company, if that whole argument has settled out among the buy side.
What's your argument on that?
I think they're a better margin car company, that they're a tech-enabled car company that should always trade at a premium multiple.
Two car companies,
because they have a better...
like single digit. GM's like a single-digit multiple.
Yeah. And even if they trade, they're growing twice as fast, and they have probably twice the operating margin at scale, so they should trade at a substantive premium to that, but they shouldn't trade on a revenue multiple.
Wow. And some of those companies in the same sphere that have already come down like 70,
the Rivians
80,
of the world.
80, but not even in just the EV. Yep. I'm talking about the ARC-type names. I hate to keep referring to them that way, but that's how people identify them as. They've been down like 70-some-odd%. There's more to go?
I think in certain of the names there is more to go. And I think certain of the names actually have hit the bottom and might be coming back up because they have a stronger core business. See, if ARC was a shorthand for speculative, those speculative stocks, you're going to have to really look at their business model. Are they really a tech stock, or are they an auto stock, or are they some kind of other stock? And what's the long-term margin structure? And in what's going to be a challenging year, are they going to hit their numbers?